what's going on, guys? Wanted to jump back on here, keep up with our monthly market updates, and get the update going for all of July. A lot happened. A lot of fears still out there, inflation fears, interest rate hike fears. The Fed had their meeting, crazy stuff going on in China. I mean, it never ends. The 30 reasons not to invest that I showed a while back. Pretty soon there's going to be the 3,000 reasons why not to invest. And for some reason, long term, the market keeps on going higher. Always investing or betting on U.S. capitalism is a great bet in the long run, in my mind, at least. So I want to give you some insight onto what happened, why it happened, and what we can expect going forward. So jumping right into some of the numbers here, it's kind of crazy looking at this. A little over a month ago, we were still having a conversation of, oh my goodness, are we going to get down to 3,100? Should we sell everything and just wait for this downfall? This does not feel good in my stomach. My gut's telling me things are going to crash. I mean, this is not good. A lot of those sorts of conversations. But as I told all my clients and, a lot of people that I talked to, we got to stick to our guns. We got to stay long term. I talked to all my clients in our 6-month reviews about the changes we're making in the models to adapt to the marketplace, adapt to what's happening within the economy, and try to limit volatility going forward. We made a lot of different moves within our specific models to help mitigate some of the risks that we see coming forward. But that being said, again, we cannot time these things. We got to have time in the market, not to time the market. So just looking at what's going on, obviously the Fed has been raising interest rates. That's no shock to anybody. That's one of their tools in their toolkit where they can slow down the economy, metaphorically start to pump the brakes on this rapid growing economy that we had from when they were just dumping money into the economy 2 years ago during COVID to help during the pandemic and everything. The Fed decides they need to slow things down so we don't have extra issues going forward over the long run. So basically what's been happening as they're raising rates and fighting this battle against inflation, it's starting to work. You might not agree with me. You might not feel it yet at the grocery store or the gas pump or in your everyday life. But when we look at commodity prices within the market, they're starting to fall. Remember when lumber was skyrocketing, oil was skyrocketing, gold, all these things were skyrocketing. Commodity prices were going through the roof. Well, now let's look at quarter to date here. Gold's down almost 2.5%. Cotton's down almost 4%. Crude oil down almost 11%, and wheat down almost 11.5% over just the last little over a month. I mean, commodity prices have been tanking, and that's the opposite of what's been happening lately. Commodities have been the place to be. They've been red hot, just absolutely killing it. But again, this battle against inflation, the Fed raising rates and trying to pump the brakes on the economy, it's good that commodity prices are starting to come down. That means what the Fed is doing is starting to actually work, which is a good sign to investors. Now investors are starting to think, hey, maybe this inflation narrative isn't as bad as we thought. Maybe the Fed isn't going to have to raise rates as aggressively as we thought they were. Maybe things aren't quite as bad as we thought. And now, boom, we get this upturn in the market. I mean, over the last a little over a month, again, Dow's up 5.3%, just about. S&P's up over 8%, and the NASDAQ, which has been the most volatile on the upside and the downside. Remember, volatility doesn't always mean down. The NASDAQ's up over 12% quarter to date here. So for the people that panicked and sold 2 months ago, a month and a half ago, they said, this is not anywhere near the bottom. We need to get out. I can't handle it anymore. Well, look what we missed out on if you were that person. We can't time these things. It happens like with the blink of an eye. People don't know these things aren't going to happen. We don't have a crystal ball. All we can do is be invested in the right manner where you can stomach the ups and downs, because there's always going to be peaks and troughs. It never goes up in a linear fashion. We know that for sure. It never has and it never will. There's always going to be volatile waters. But that being said, again, investing in U.S. capitalism, patience has always paid off. There's never been a time in history that we didn't recover from something. So I try to remind my clients of that and talk about, why I'm a little bit more bullish than maybe others are. So I want to show you some clips here. And first off, from the meeting that the Federal Reserve had, Jerome Powell came out and had some remarks really interesting about whether or not the U.S. is in a recession, which has been another really hot topic. People think of a recession and boom, you go right back to 2008. People even start to think about depressions. I mean, it all sounds so similar that it just brings up bad emotions in people's minds. Well, there's so many levels of a recession. I mean, a technical term, a recession just has to be 2 consecutive quarters of declining GDP. Both quarters could decline by 0.001%, and you're in a recession technically, right? I mean, there's also been a lot of controversy about changing the terms of what a recession is, depending on what side of the political spectrum you're on. It can be a little bit of a hot topic whether, one side caused a recession, the other side saying it's not really that bad. Well, there's so much fear around it again. Jerome Powell addressed it, talking about his thoughts on how the economy is sitting in terms of a recession standpoint. So I want to show you what he said here. I have the closed caption on because the audio is kind of not that great, but at least you'll be able to read along. Okay, so just like he's saying, the labor market's doing great. Inflation is starting to tamper down. There's so many things that are happening under the surface that, point to this not being an insanely bad recession like people think the second they hear that word, the forbidden word of a recession. So, something that we're going to have to be paying attention to going forward is how the labor market is performing. And some of those numbers are coming out later this week. So that could have a little bit more of an impact on the how the Fed's going to handle things moving forward and how much they actually need to continue raising rates or not. But overall, like Jerome Powell said, he doesn't think that the U.S. is in really an actual recession, maybe in technical terms, but not in his mind in real world perspective. So we have all different sides of the fence here, right? So funny on the internet. You can find people that say, you need to buy all gold, buried in the backyard, and we're headed for just the end of times. And you can find people that say, hey, the markets are going to go up by 4,000% by the end of the year, and you need to invest extremely aggressive right now today, and I'll tell you how to do it, right? Whatever you want to find, you can find it. So obviously we got to find a happy medium there and use our own critical thinking skills to kind of determine what really is the best route. But, we have the fear of recession on one side. On the other side, we have chief investment strategist from BMO. His name is Brian Belsky. He calls for the S&P going to 4,800 by the end of the year, which would be a humongous rally. But I want to show you a little bit of his reasoning and why he thinks that's the case. I do. Look at commodity prices. Look at lumber prices. And what we've seen in miles driven and what we've seen in gasoline prices. I do think that this could fall off a lot down here. But think about too, that Farmer Jim loves to talk about onshoring, a trend that's been going on for a long time. I don't think that we're going to be companies in the United States are not going to be putting themselves in the same type of scenario that they did with respect to the lockdown in terms of supply chains. And I think supply chains are opening up pretty dramatically, Scott. I think that's all going to add up to an elevator down in inflation by the end of the year that most people are not expecting because we're still kind of playing defense. And the most bearish people, by the way, they're the ones that missed the move, Scott. They're the ones in May and June that were calling for 3,100, 3,400, and now they've missed this big move in markets. And so for them to turn bullish now, I think that's fantastic. I don't think they will because they want to double down here, especially given the seasonality portion of the market. But let's see some of these people fold on their bearish calls in September, October. But for the year-end rally, that could be a face melter. The face melter, I like it. So again, Brian Belsky thinks inflation's going to plummet and the economy is going to boom forward. And all the people that were bears and were hiding in the corner and not sure when to get back into the market are going to regret it and are going to miss out on this big upturn and just end up eating those losses. So again, we'll fall somewhere in the middle of there probably. Who knows if we're going to reach 4,800 by the end of the year. But I am consistently long-term bullish. Of course, it depends on your financial situation, how close your goals are. We're going to set up your investments accordingly. But at the end of the day, guys, I mean, we still got to live by the same principles that work day in and day out, right? Being consistent with our contribution, budgeting well, living below our means, having the correct risk tolerances. I mean, there's certain things that we discussed when building our financial plan that are going to always hold true in good times and in bad. And that's the beauty of actually creating a financial plan and talking more about your specific goals and everything. But in terms of what the market's doing, obviously, again, great last month. I really hope that if you're one of my clients, you weren't, but if you're not one of my clients, I hope that you did not get into the sidelines and sit in 100% cash and miss some of these upsides. If you ever have any questions, I'm always open to chat, talk about your specific situation and see if your specific investments do make sense for your goals and for your risk tolerance and everything. So with that, I will leave you guys for this month. Hope that everybody had a great July and a good start to August here. Markets historically don't do super great during August and September, and then potentially we can get the end of the year rally that happens. So who knows? Hopefully that we get some great more months like this throughout the end of the year. But either way, regardless, I hope that everything's well there and hope you have a great August. All right, with that, we'll talk to you later. Take care. Bye.